Hey, it's Mac with PriceActionTradingSystem.com, and it is December the 13th, Wednesday, and this will be our chart lesson for the day. And it was not not a very good trading day. We had some really good movement early, but there's just not really any decent way to get in this trade. And then we just kind of went flat. You can see we really spent most of the trading day in a trading range. Most all the movement was in the overnight or right at the open, and then it's just kind of sideways action. There's two tiers here. Um, this was pretty obvious early on. I moved this up a couple of times till we finally found a consistent area. And once you measure that, once we go lower, that's your target. You said we went a little bit lower than that. Um, the kind of lavender color box here, that's during that's about 30 minutes prior to the 1 o'clock. There was an FOMC announcement today, and generally you want to be flat prior to that. And this is a good example. It didn't really move real quickly here when it changed, but I mean, you would expect when we bounced off here, we'd probably try to go back to the top, but you don't want to be in the market generally you don't want to enter a trade about 30 minutes into the move, and really there didn't much happen today. This is really weak for an FOMC announcement. Very little but movement at all. But you can't risk that going into it because I've seen it move 15 or 20 points in just a blink of an eye, and you don't want to get caught up in that. So this, I would say by about 20 minutes after, it was pretty obvious that any news item type stuff was over, and you actually got this failed second entry short here on a retest of the high, and that would have been a nice place to enter. So, but yeah, there just weren't any entries early on. Even though prices are trending really well here, you got to wait on the right entry, and we really just don't get one. So anyway, needless to say, it won't take long to go through these trades, and but you can see there's two clear legs up here, and this is way too steep. A nice healthy trend is usually about a 45-degree angle, more like this, and it's usually bouncing off the EMA and the trend line, and that's a good healthy trend. And really, even though there's a more of a flatter trend here, I don't really think there was another trend. You can't argue this trend line. It's holding prices, but what this is you had a break of this channel, a move to a new high, and then we really just went sideways after that. You got a nice correction, and then we just stayed within those highs and lows after that point. So actually we went a little bit lower here, but by the time the market closed, we were back inside that area. But it's pretty obvious where your lows are here and your highs are here. So once we went lower, once we went through here, you just measure that first one, and that would be your target. And you can see we actually broke through that, which was a good place to try to get long, but that's right into the 12:30 hour, and you don't want to be entering. I probably would have marked this one as a long, your high or low here. This is too bearish. Even though we're a little ways away from the MA, it's too bearish. So I probably would have marked this as a long, and then the rest of it you probably want to skip. This would have been a nice place to get short, but it's such a big bar, and we do have a trend line working up, although I think the range is probably taking precedence here, but because it's going into the news item, you just can't risk that. So, but anyway, let's start from the beginning. We'll talk about the trades, and there's two legs up here, and then you get your really first close outside here, but this is also a failed second entry short. If there was more room before that high, I would probably give this a blue arrow, but there's not much room to get out. Plus there's two matching highs there, which makes it a little bit sketchy. Really the way you'd want to enter this one is let it break higher and drop a limit order in here and try to get a little better entry without as much risk. It would have worked either way, but you definitely want to get in with enough room to get out before these highs, preferably the close, but definitely the high. You could really almost argue for a double test here, but you've already got a break in a new high. And while you do get a second leg up a lot of times, this bar is just too neutral, and so you really need a higher low, which comes here, and it actually went lower in turns and goes out the other side. Again, you might try to get a better entry. Just make sure you got room to get out wherever you enter that one. And again, it wouldn't have mattered. This is a pretty strong move up, so you're probably going to get a retest with a new high, but you don't know that, so you can't risk it. You got to make sure you get in following the rules. We actually come back again here, and you could really treat this like a failed second entry short and then another bounce off the trend line, because this is a double bottom. So first entry, second entry. So you could even argue for that one. I didn't mark it, but I'll mark it green. Your stop still has to go below this one. And again, I would make sure I had enough room. And this one, you could even argue for it to be, it's right there. You could argue for it to be blue, but I think you were better off to be in here and skip this one, because really there's a lot of, we're really starting to go sideways here. But the real key here, actually you wouldn't have seen that yet, but you can see we're starting to go sideways. The EMA is still pointed up, but that's just because it was so strong earlier. But we've already got a break and now two legs up, so that really makes that one suspect. So that's the reason I'm going to leave it, even though it bounces off that trend line right there, a secondary trend line. I just think it's too much risk that close to the high of the day. And then we just, as I said earlier, we just started kind of going sideways, and really this is like a failed break lower out of that. And again, you want to have enough room to get out before that high. You probably wouldn't have got in this trade without a limit order, and at that point I don't know if I'd have risked it. But if you go back and look at both of these trades, it got just enough. You need 6 ticks to get in with a buy stop, and you notice both of those trades got exactly 6 ticks, so you wouldn't have got 1 tick more. And that's why we go for 4 ticks, is because we've proven over and over that is the kind of the sweet spot. Because if we'd have went for 5 ticks on either one of those trades, actually this one wouldn't have been a loser. You'd have had to ride all this out, but it never would have come back and stopped you out. It would have eventually got higher. But by the time it made its high and started backing up again, it got exactly 6 ticks, which is what you need to get a 4 tick scalp. Using a buy stop 1 tick above the signal bar. So, and actually you would have entered above this bar, but your stop would have went here. And then, and really what this is just like a failed break lower. You can tell we're going sideways there, and it like drops below. And it's a little small bar. It's only 2 ticks, real low risk. That's the kind of trade you want. And you might have considered going short here. I didn't mark that one. I'll mark that one green as well, because it is a lower high and it's a very bearish bar. But hang on until I get back to it. But I'll mark it green. We've had a break and a move up, but we're just kind of going sideways, and you might get that last push up. But so you definitely wouldn't want to go on the first. This is the high, so this is like a lower high, double top or whatever. So that gives it a little bit more credence, which is what you want. And but I'm still just not crazy about it, because there's so much resistance across there. You would expect that it might break higher and fail, but it may go higher than that, because a lot of times when you break through that kind of resistance, it'll hit a bunch of quick stops and run up real quick. And so I'm just a little bit hesitant to enter right there with that sideways action and all that resistance. I'd like to see it move a little higher, or either have that reversal pattern, which doesn't come to right. Really, the reversal pattern comes here. So, and now you've moved too far. You're too far away from the EMA. But this is a double top, so you can count that as a new high. And you pull back first entry, pull back second entry. It comes back to the EMA. You don't really care about your signal bar since it's a failed second entry long. And I like that entry right there. And you can see how that one moves real quickly. That's how you can tell if there's a trap. They obviously trapped some people up here, and all these people that were long, when it starts dropping like this, they go ahead and exit. But I talked with somebody else about that today, and I want to say they were, I can't remember where they were getting short. They were trying to get short somewhere and it failed on them. But you got to be really careful. Uh, the idea behind a failed second entry long or a failed second entry short is that it's a trap. It fools people into entering the wrong way and then it reverses. And generally, when you know you got people trapped, is you'll suddenly get a big surge of a move like this one down here. And what it is because they got all these people that probably were getting long up in here, and when it suddenly starts going against them, they got to exit, and they just all try to run for the door at once, and you get the big surge like that. And you can see the same thing here. It's not as big a surge as that one, but we're trying to work higher again, and then suddenly it surges down again. That's because this is a long trap, a failed second entry long, and it traps people. And so you go short there. And this would be your target down here at this line, as we talked about earlier. And this is really a second entry short right here. And you're expecting prices to probably try to make that measured move. But this is just way too bullish. And this is not a perfect inside bar, really. If it had closed on its low, I may tell you you might go short below it, and your stop still has to go above that bar right there regardless. But I think you're better off is getting towards that 12, towards that 1 o'clock. It's after 12 now, or getting towards 12. There's still a little bit of time there. If you'd had if it would have ticked higher here and turned down, maybe, but it doesn't. So I think you're better off just to skip that. And that gets you into that 12:30 kind of range where you want to be out of the market because of the FOMC news. And then we came out of that. I'd say by the time you got this failed second entry short here, the market was looking, it was looking pretty normal again. So I like going long there just to ride it back up. Plus, notice you got this channel working up, and you get that failed second entry short. So we're probably going to retest that high again and retest the high of the range, and off it goes. So I like that one. This is a double bottom, so you can count this as a failed second entry short as well. Only problem with this one is where there's not much room between there and the high. The only way you could justify that one is if it backs up enough and you can get in with a limit order enough to get out before that high. Again, it got exactly enough ticks, even if you'd use this, I believe it did. Well, maybe it didn't if you'd use a buy stop, but you can clearly see there's not enough room there with a buy stop to get out. So the only way you could enter that one would be with a limit order with enough room to get out before that high. And that late in the day, it's just probably not worth risking it. But there weren't a lot of trades today, and so if you were still looking for a trade, you might consider that one just because of it is a failed second entry short. It's just the only problem with it is it's right into those highs. If you had plenty of room there, that'd be a blue one for sure. But I don't think you could have got in that one even with the limit order. I think your limit order would have had been back here a little further, and so I doubt you'd have got filled on that one. It's possible, but doubtful. So, and it's so close to the 2 o'clock hour that I'd probably skip it. And you can see they had a nice reversal low here in the afternoon. It's after 2 o'clock, but we'll just talk about it real quick since there's not much else. But notice you got a little trend line working down through there, and you get a failed second entry long. It fails, a nice bearish bar, and you're probably at least going down to test this low again. Just make sure you got enough room to get out before there. It didn't matter if this thing takes off, but that's a perfect reversal pattern there almost. So you shoot right through the EMA, you pull back and test it. Generally, you like to see this failed second entry be that first bar back. But this is still just as good as two pretty much almost measured moves, and then that failure, big bearish bar. That's what you want to see on a reversal, that type of setup. So, but yeah, there just wasn't much happening today. Even though you would be able to say we had a lot of movement during the day, most of it happened before the regular open, and there's no real setups. I mean, there's no real decent setup here. That's just a doji basically. So it's a first entry. You could probably argue there's a hidden second entry there because there is. Prices move down, go up, move down, but that signal bar is so neutral that there's no way I'm gonna risk that. It turns out to be a good move, but you don't know that in advance, so you don't want to risk that. And that's what'll get people a lot of times is that they'll sit there and they'll say, "Oh, I want to enter, but no, it doesn't really fit the rules because it's not a very good signal bar." And then they'll watch it take off, and they'll say, "I knew I should have taken that trade." But what you have to tell yourself is, even if you have to watch it go without you, you followed the rules, so you did the right thing. Because next time you see that setup, um, and you'll try the same thing, and you won't follow the rules, and guess what'll happen to you? It'll go 2 or 3 ticks like that one right there, and then turn around and back up and stop you out. Notice how that looks kind of similar there, kind of a neutral bar. And if you said, "Hey, I'm gonna take it," then that's what happens to you. And even though that one you wouldn't have got stopped out there, it's just still kind of a setup, and it could have easily come back and stopped you out before going higher. So that's the reason, if you follow the rules and it goes without you, don't let that bother you, because all it'll do is tempt you to try it again the next time. And the next time, guess what? It doesn't work, and you say, because if you try to pick and choose, generally it's, most of the time that's going to fail if it's not a good signal bar. Occasionally you'll see some great moves from an ugly signal bar, but most of the time that's the best way to filter your trades is through your signal bar. So like this short right here, that is a great signal bar. That's a great signal bar right there, and look at that nice move. That was a pretty good signal bar right there for a long. It's got a nice move. Again, a nice bearish signal bar, a nice move. And so your signal bar is important. So keep that in mind. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. And but just not much happening today. And then you had this FOMC news. They did raise interest rates, unfortunately, but it didn't affect the market very much. So the market must have been expecting it. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.